Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Robert McCormick, CEO of Nasdaq-listed TrustCo, to discuss how TrustCo is committed to the communities it serves and the future of brick-and-mortar banking. Robert, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me, Jill.
You got it. And tell us how TrustCo is committed to the communities in which it serves.
Well, TrustCo is committed in a number of ways to the communities it serves. First and foremost, we're well known as the hometown bank. We have a tremendous number of brick-and-mortar locations that serve a variety of communities throughout our service area. We're also very active in the community with our employee volunteer time, and we make a number of contributions every year to specific organizations that are designed to provide affordable housing, feeding the hungry, and other services to provide for our communities and the places that we do business. We are very proud of our reputation within the communities and very proud of the accomplishments we've had with regard to service to those communities. One of the greatest services we pay, Jill, actually, to our communities is the dividend we pay every year. And I know that's a follow-up question, but many college educations and many donations are made to charitable organizations through the dividends we paid to our shareholders for a number of years.
How long has TrustCo been paying a dividend, and why is that important for bank investors?
Well, as best we can tell, we've been paying a dividend since 1904. And it's important to investors because it's a huge part of the return in most banks. Banks, generally speaking, are boring stocks, so that a lot of investors are very interested in purchasing bank stocks for the dividend and for that purpose. So it does provide a huge portion of the return, total shareholder return, as part of the purchase of our stock.
Right. Well, in this environment, sometimes boring is a good thing, steady and consistent. Robert, how does the expansion—
Sounds like you know me.
Yeah. How does the expansion into Florida play into the bank's future prospects for growth?
It's an interesting story, Jill. A lot of people question how we ended up in Orlando. About 18 or 19 years ago, we had 60 locations within 1 hour of Albany, and we were stepping on our own toes. We found our branches were competing with each other. So we decided we'd form an internal task force to look at alternate locations. And we looked at a number of different places and in a number of different cities, looking for economic and geographic diversification. Orlando was chosen because it was a community that lined up pretty well with Albany. It was a service-based economy. They have a very strong college network and a very strong hospital network. And we lined up very well with them at the time, and we expanded by opening Denovo branches.
Looking back, was expanding the bank Denovo advantageous?
Well, Denovo is tough because Denovo is slower. It's not as slick. It's not as sexy as making a large acquisition. But you make your own hay as you go, Jill. You're not buying a number of problems from another company, and you're not taking on a lot of goodwill that you have to amortize. You can pay for a lot of expansion through some of the things I just mentioned by doing Denovo and going a little slower. And it's worked out very well for us.
What does the future look like for brick-and-mortar banking?
I think every bank CEO in the world probably has the same question. You walk a fine line right now because a lot of your older traditional customers prefer a brick-and-mortar location, and many of your younger customers evolving where they don't really care if you have a location. We open very small locations. We try and keep them between 1,500 and 2,000 square feet, and they become billboards and initial points of contact for our customer base. So our brick-and-mortar network has been very effective for us. We're also well known because of our hometown bank motto. We're also very well known that TrustCo is a place where you can go in, hopefully the person is greeting you face to face, and if you have a difficulty or an issue, there's someone behind the desk who can help you resolve that issue. So that's the other service that's provided by a brick-and-mortar location. Many of our customers, Jill, are almost like rebound customers. They've gone to the mortgage company or they've gone to an out-of-town lender, and their loan has been sold 4 or 5 times, and they don't really know where they're at. So we end up refinancing them back to us. They stay with us for the life of the loan. We don't sell our loans. We're a portfolio lender. So our theory and our philosophy for our company has served very well.
And TrustCo is celebrating its 120th anniversary. How do you envision the bank evolving in the years to come?
I think the bank has evolved in a lot of ways, and I think the bank is stronger today than it ever has been. We are a well-capitalized company that has tremendous liquidity. We have wonderful earnings, very strong loan portfolio with very few problems, and we pay a very healthy dividend. So the bank is really on solid footing. And I do have to say, part of the solid footing is contributed by our affiliation and relationship with Nasdaq. You have truly opened us to the world.
All right, Robert, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
It was nice meeting you, Jill. Thank you.